Erick, why did you join the community? What has been your experience since you joined the community? Why is this something that you've been excited about? I mean, I just want to hear from your perspective.
First off, I found it to be one of the easiest sales conversations that I've had. Very quick. I mean, we got him approved for his first amount of $500K at 8% interest amortized over 10 years. There's less than 1% interest per year. And that was within 5 business days from the first conversation I had with him, from the first connection to him getting approved for the capital.
You brought in a partner recently, and in his first month working with us, I mean, how much money has this guy raised?
The offer started price somewhere around 10 to 20K.
Right.
When I saw how much capital we get people, how fast we get it done, the kinds of terms that we get people, because it's the best terms that they're possibly qualified for, and then just the demand for the offer overall, I knew right away, like, yeah, we got to hit it right here. This is something special. It's different.
The first company that I actually ended up using this product with was a music marketing company. Before they started working with us, they were doing $10,000 a month in business. He went from struggling to do $10,000 a month for years to doing over $300,000 in a month in his first 60 days. Bro, they just got somebody funded for $151,000.
150, no docs.
No doc. We are literally the best financing company in America. If you don't master this ecosystem of earning money, protecting money, and growing capital, you are not positioning yourself for long-term success as an entrepreneur. And this is the things that people don't understand. Like, has there been anyone that has been able to compete with what we've been able to do?
No.
Go, hype me up. All right. Today we have King Edwards and my main man, Erick Alvarez. Erick Alvarez is extremely important to the high ticket offer financing community. As a matter of fact, as soon as I'm going to give him his flowers while he's alive. I have been in the funding space for over 10 years. And when Erick came in, he was able to quickly help us scale the company to where we wanted it to be by adding in all of the systems and processes, and specifically all of the client communication that's absolutely necessary for scale. Erick Alvarez has been absolutely integral to that. So I want to give him one more round of applause before we get into today's episode, please. Yes. So today's episode is really speaking directly to potential partners, individuals that are interested in utilizing our financing mechanism. We've been in the trenches, really making sure that the product is perfect for you guys. So we're going to get into all of the questions that you guys have, the different things that we hear often, to help you guys understand why we are absolutely the best. But I don't want you to hear it from me, because I am the founder of highticketofferfinancing.com. So I want you to hear it from Erick Alvarez as somebody who joined us. I want Erick, why did you join the community? What has been your experience since you joined the community? Why is this something that you've been excited about? I mean, I just want to hear from your perspective.
So I'll give a little bit of the backstory behind it too, but end of the day, really just came down to, first off, I don't do business with people that I don't want to do business with. I think life's too short. We've all been screwed over by bad business partners in the past.
Yep.
And picking the right business partners, like almost like a marriage. Mm-hmm. You have to be very selective. So you and I got connected a few months before we started working together. There were some opportunities on the table. The numbers didn't make sense. Didn't happen at that time, but we stayed in contact. So then you approached me with this. Obviously, I was open-minded to it. And to be honest, I didn't really understand it. Mm-hmm. It was a whole new space for me. I never, been in the financial services space necessarily. But I knew I liked you and I liked the vision and I liked what I heard. I don't remember exactly what we talked about, but I remember that it felt good and that I wanted to do it. So after we decided to work together, within like the next day or two, I remember I was in the car with my girl and I'm talking to her. I'm like, I don't know why, but all of a sudden I'm getting really excited about this funding offer. Like, I don't even know, I don't fully understand it, but I don't know why I just feel good about it. And I start getting really, really excited. And then obviously as time goes on, you start to, I start to understand it more, and I see why I felt so excited. But end of the day, man, it's about working with the right people that have integrity, and that was yourself, people that carry themselves the right way and are about their business. The reality is most people, they say they're about something, but they're not going to back it up with actions. A lot of people on social media that, they just look the part. They can, dress the part, but there's no substance behind it. So I knew working with you that we're going to do some great stuff. And the offer is very strong. It is very strong. I mean, I can go into more from there, but I think
get into it.
So basically, I mean, once I started to understand it and see more about how it worked, I mean, within 48 hours, we had our first potential deal on the table. The guy wanted $2 million in funding, and that was just for me reaching out to my network. In fact, it was for me reaching out to a current business partner that I have, and he had someone, and I started to see how fast just people want this.
Talk to me about that. Talk to me about that. Your first deal, what was the experience going into the deal? How much did we get him approved for? Let's just talk about that real quick.
Okay. First off, I found it to be one of the easiest sales conversations that I've had. Now, I've been in sales since about 2018. Started as an entrepreneur, had my own businesses, became a VP of sales for a big data tech company, been a closer, all that stuff before, we started doing what we're doing. And I've sold all kinds of stuff, coaching programs. I mean, I've sold to every kind of person. Is the broke 9-to-5er all the way up to Fortune 500 companies. In fact, the person that introduced me to the space of high ticket closing, Dan Locke, I was on the call closing him and his company. So I've talked to all kinds of people. So I've been through all those different dynamics, B2B, B2C, B2B2C, one call close, two call close, multiple long B2B deal cycles. You're dealing with different enterprise companies, etc. And when I had this offer, I just told one of my business partners about it right away. He's like, "Oh, my boy needs funding. Let me get in contact with him." Boom, got in contact with him. All right, he needed $2 million for his business. He had like bodegas, little grocery stores in Orlando. He wanted to expand his franchising and his chains. So I didn't know the process yet, so I was kind of running it with you side by side. You're kind of like guiding me through that process. But I got on the phone with him, and it was literally a 15-minute conversation, 10 minutes of just, connecting with each other, talking, getting to know each other, 5 minutes of business, and boom, that's literally all it took. Then from there, just getting the documentation. He had the docs, he was qualified for it, moved fast. And it went from there very quick. I mean, we got him approved for his first amount of $500K at 8% interest amortized over 10 years, which is less than 1% interest per year. And that was within 5 business days from the first conversation I had with him, from the first connection to him getting approved for the capital. So when I saw how much capital we get people, how fast we get it done, the kinds of terms that we get people, because it's the best terms that they're possibly qualified for, and then just the demand for the offer overall, I knew right away, like, yeah, we got to hit it right here. This is something special. It's different.
Yeah, I mean, that was a great deal, because that was absolutely your first one. And when that happened, I actually knew that you were actually going to be very special to our organization because of how quickly you brought that to the table, the size of it, and the way we started dialing in the process the moment right after that, right? Coming up with all of the explanation audios, etc., and just making sure that the customers themselves know exactly what they're getting into, how it works, and just being able to operate at scale. And I'll tell you what, that kind of brings me to, and I thank you for that. I've been in this space for over 10 years, as I said, and I've had the opportunity to work with a lot of different entrepreneurs. And one of the things that made me just say, you know what, let me just dial in this offer and focus on helping entrepreneurs utilize this funding mechanism for their own business is, and I'll tell it in the form of a story. So when I first started using this platform, I was using it for our own offers. I was working under another company. And we were helping people close. I mean, listen, they were doing 3 deals a year when I started working with them. We retooled their business model, very similar to what you did with me. It was just at the infantile stage. Like, they were only doing 3 deals a year, and took their company to doing 150 deals in my first year with them. In going through that process, you know, I started to understand that there's, you know, we actually did a lot. I mean, we used the funding, bought a lot of real estate, got into a bunch of different sectors, crypto, exotic cars, etc. And at some point, when I decided that I wanted to get on the internet with the offer and start, you know, helping other people utilize this funding mechanism, it was because, you know, there was a moment in time where I was like the guy that everybody was depending on for money. It was just like, it was one of those things, you know, like I just felt like it was weird because I'm like, well, I'm doing business with the banks. Like, all of you guys could learn this system that I'm doing and integrate it into your system. And you can use it the same way I'm using it. And the first company that I actually ended up using this product with was a music marketing company. It was the first company outside of my company that we used it with. And man, their first 60 days before they started working with us, they were doing $10,000 a month in business, struggling to do that. Right. So they were getting individuals to pay for their music marketing services, but they were struggling to make $10,000 a month. Like, 10,000 was a great month for them. They were really doing about 2,000 to 4,000 a month. And so I just asked them, I said, listen, you know, if you were able to charge $150,000 for your products and services, how much, like what type of product, what would you deliver to your client? So we created this $150,000 offer. Then I said, all right, great. Well, what does it do at 100,000? All right. Well, what about at 75? What about at 50? What about at 30? What about at 25? So we developed all of these offers, and I told them, I said, from this moment on, these are your new packages. The next time you get on the phone with one of your clients, you tell them about these packages, and you tell them that if they don't have the money, you have funding. In his first month, he went from, in his first 60 days, his first 2 months, he went from struggling to do 10,000 a month for years to doing over 300,000 in a month in his first 60 days. And that was my first person that I gave the funding opportunity to outside of myself. And I was like, okay, you know, if we can help this person do this, then we need to get this out to everybody. The thing is that one thing that we absolutely stand on here, which is very important for me, is that, you know, we only work performance based. And that's the thing that I respected about you early on. Like, even when you came to us and you know, when we were figuring out how we were going to work together, you said it best. You said you only work with people you like. And the reason why that's important is because nobody's paying you to get on board. Like, you came in and you saw the opportunity and you said, all right, cool, let's restructure this and then let's make it a partnership, which I loved, because that is exactly how I work. The reason why, and for us, because we work performance based with all of our partners, because we work performance based and we earn our money from funding, it was very important for us to have funding that works at scale. And the thing is that we were using the funding in multiple industries and retooled it for music, real estate, crypto, exotic cars, Airbnbs, trucking, right? For years, we were doing this on our own. And so I knew I knew exactly how the product would work for other people. So when I saw this individual was able to charge that kind of money and get paid for it, that's when I knew we had something. And here's the thing, guys, it's not just about the money that you're earning, that you're able to earn here, because yes, you're able to earn money here that is, you know, that's going to be insane. I mean, I think you brought in a partner recently, and in his first month working with us. I'm talking about Jesse now. I mean, how much money has this guy raised with his client? Like his first month working with us.
Okay. So they start. I think their offer is probably around like somewhere between 10 to 20K.
Yeah, come closer to the mic. Yeah.
Probably their offer started probably somewhere around 10 to 20K.
Right.
And he was brought in by another partner.
Yes.
So we brought a partner. He basically created his company based off of us, and then he went to them, brought them over, and when they found out what we can do, they created a 50K offer. The first client they sent in got 50K all cash, one lender within a week.
Yep.
So like, holy shit, it works.
But he thought it was a fluke.
He thought he was extremely skeptical.
Yeah. Because
he's been through all the other companies. In fact, I used to be a closer on his team.
Oh yeah, okay.
So I actually used to work for him, or work under him years ago. And we use special financing, coach financing. We did the credit card thing, PayPal credit, all that stuff to try to get the capital for people.
Man, there's so many. There's coach financing, client financing,
FinFi, Elevate, FlexBuy.
Listen,
everyone's gonna say they can fund in theory. End of the day, what I tell everyone is, okay, everyone's gonna tell you they can do X. What matters is, are they gonna get the job done?
Do they?
No, because another company that I work with, they're using FlexBuy. They have a 45K offer. They've been using FlexBuy for, I think, like over 1 to 2 years. And all that time, I think they got maybe 1 or 2 people.
That's crazy.
Funding.
That's crazy.
First deal they sent over, boom, got in the capital.
Done.
So, yeah, Jesse was extremely skeptical. And they created a 50K offer when they saw like what we can potentially do. Got that first deal closed, and they're like, "Oh my gosh, it works." Where I was like, "Yeah, I know it works. Now you know, right? Because everyone's gonna be skeptical when they come in, but we obviously know what it does." But I was like, "But we can get in more capital, so make a bigger offer now." Like, all right, cool. They made a 95K offer. So I think we already have 4 or 5 people we've gotten funding. Another one sent in today, and this is in the first 45 to 60 days since we started. So run the math on that.
It can't be 60 days yet. It cannot. It has to be like 30 to 45 days.
Yeah, I think we're around 45 day mark now. So you run the math. It's probably around an extra $500,000.
Bro, they just got somebody funded for $151,000.
150. No docs.
No docs.
Just a credit report. But no docs means. So people that don't know, because I didn't know what that really meant. It means literally they just send in their credit file from Experian, no other proof of income, no business revenue, nothing, just their credit file, and we get them funded.
Yep.
So
we had multiple. So right now we have multiple $95,000 deals that we've completely funded already. With this same group. We did the 50,000 when they first started. We did the 151,000. We have at least 3 $95,000 deals that are in the process of being funded, but all of them are almost completely funded, and I think one of them is overfunded already.
Yeah.
So, and that's in their first 45 days. So you have a company. I don't know what their conversion ratio was before. But you have a company who tried financing for the last 2 years, had no success, was able to close 1 or 2 leads, comes to highticketofferfinancing.com. Every single person that they sent to highticketofferfinancing.com since they got started has gotten over $50,000. 100% of them.
Yeah, all no docs.
All no docs.
All been no docs.
Even the 151,000 was with no docs.
Yep.
So listen, I'm gonna go on a. We are literally the best financing company in America, and I would say probably I don't know what happens outside of America. I don't even know if they have the same funding mechanisms that we have here, and we'll figure that out too, because we're gonna need to expand with BRICS and all of these and crypto, and we'll expand into different arenas as well. But when it comes to actually funding clients, okay, we are the best. I have not seen, and I'm not just saying this, I was talking to a potential partner recently, or a new partner. They decided to join, of course. And they asked a very specific question. They said, well, we're doing interviews with other financing companies now. What makes you different than the rest? I'm like, well, what makes us different than the rest is that we'll actually fund your deals. You know what I mean? as a closer, right? As a closer, you've worked with other companies that have used financing before, right?
Yeah.
So I'm asking you this organically. Like, has there been anyone that has been able to compete with what we've been able to do?
No, the only one that maybe was getting people funding, which I'm hearing now from people that are using them, because I'm talking about 3-4 years ago when I used them. I'm hearing now, I mean, whatever, I'm not gonna get into the details or throw shade at them, but was Coach Finance or Special Financing. And the thing with them is that they have that tier 1 through 5 structure where they're taking 25% to 70%. So if you close a 10K deal, and almost everyone's a tier 4 or tier 5, so taking at least 35%, you're getting 35%. So if you have a 10K offer, you're making 3,500 on that, and you're not getting paid the rest till they pay off the terms of their loan, which could be 1 to 2 years. And then the interest rates for them are like high 20%. Some, not the best terms. So it's not a win for you. It's not a win for the client. It doesn't come close. And what I tell everyone is that we specialize in 2 main things. Number 1, getting you the max capital you possibly will qualify for. And number 2, getting you the very best terms you possibly qualify for. And that's why literally almost every single partner without fail comes, one of 4 things happens. Either come from more funding, multiple rounds, they send referrals, they end up becoming a partner in the business, happen multiple times, and they send testimonials. Because not only is it a win for the business that's sending them, and win for us, of course, but it's a major win for the client, where it's not like partners are sending their clients somewhere that their client's going to be screwed over. Clients are very happy with the service and what they get, which is why they keep coming back for more.
Yeah, and listen, I tell people this all the time, and I want to be absolutely clear. When I'm saying that we're the best, I'm not saying it because I am the owner of HTOF.financing.com. That's not even how I think. Like, I'm not, this is the first piece of content that we've done since we've started. I haven't had to do content. And to be honest with you, it's so many partners coming on board, and they're sending so many leads. I don't necessarily ever have to, this is not something that has to be done. But I do think that it's important for people to understand that I'm saying it because it's true. Like, I'm saying it because we go above and beyond to get the results for you guys, because we only get paid when we get you the results, right? There's a lot of funding, people who claim to do funding that will make you pay them up front, right? And when you pay them, nothing happens on the back end, right? The reason why high ticket offer financing is the strongest broker aggregate out there, and it doesn't matter who is doing funding. It literally doesn't matter who's doing funding. They are not going to outperform us. The reason why is because we have physically gone through everybody's funding option. We've paid for everybody's service. Some people $30,000. In order for people to be able to get the level of funding that we have, they would have to be liquid enough to pay for everybody's service and get screwed over that many times before they can understand who's actually operating at scale. Because it's not about just being able to fund 1 or 2 deals. It's about being able to fund 1 or 2,000 deals. It's about being able to fund 1 or 200 deals. What does that look like for a coach or consultant, right? That looks like you have a lot of clients coming through your pipeline, and they're all asking questions, right? They're all in different places in their process. Okay, do you have the bandwidth to answer all of these questions for the client? No, right? Because not only do you have to learn about how the funding works, but now you have to explain that to someone else, and they're asking you questions back and forth. One thing that makes us special is that we focus on the funding, and we have a whole entire team that you've brought on board that focuses on explaining the funding mechanism and how it works to all of the leads that are interested in funding. So these individuals that are having all of this success so quickly, it's not just because they're sending people to funding. I mean, as you said, there's tons of funding companies out there, right? But if he only closed 1 to 2 deals, it might be half of it might be because, FlexBuy doesn't fund well, right? And the other half of it is because they can't close the deals because they don't understand FlexBuy's process totally, right? What we've done is a hybrid of closers and funding all together. So when you bring people that are interested in our product and service, are interested in your product and service, they're not interested in our product and service. They're interested in your product and service. When you send them onto your team's calendar, literally, you guys are essentially closing the deal for them, right? All of the questions that they have, we have the answers for them. We've been doing this for a very long time. We've had a lot of success doing this. We've helped a lot of people do it. We have a lot of testimonials, and people come in and they speak to people who understand how the process works, who have worked with a lot of people who have used the process and are convicted about us being able to achieve what it is we say we can achieve. And they come through and they move forward, and when they move forward, they get funded. So that process of being able to help coaches and consultants scale is the thing that makes us different. We're not just interested in just helping people get funded so that we can make some money. We did that a long time ago. What we're doing here is we're passionate about helping more entrepreneurs become successful. Because you talked about the first conversation we had. The first conversation we had was about the fact that 98% of all entrepreneurs are earning less than $1 million a year. 86.1% of all entrepreneurs are earning less than $100,000 a year, right? And when you look at a company like Harvard, yes, I'm calling Harvard University a company. Harvard had 1,667 kids in 2023 graduate from their university at $57,000 per kid, right? And that's just the tuition. When you add the books and everything, it's actually $83,000. But if we remove the additional $30,000 and we just focus on the actual kids' tuition that had to be paid, do you really believe, okay, the average Black American has less than $17,000 in the bank. The average Latino American has less than $23,000 in the bank. Do you really think that kids were paying all cash to go to Harvard University? We all know that student loans exist, right? We all know that people not going into Lamborghini. Most people are not going into the Lamborghini dealership and cashing that out. We all know that people are not going to that $1 million property and cashing it out and paying for it all cash. We know that. But as entrepreneurs, we never thought about the idea that you can just integrate financing into your business and you can become the next Harvard University. You can become the next Lamborghini. You can become the next Bentley if you have financing options in your business, right? I've been lucky enough from the very beginning of my entrepreneurship journey. I mean, I've had a long entrepreneurship journey before I got into this, which was full of valleys. There were no peaks when I started as an entrepreneur.
Oh, yeah.
Valley. We're going to get into some of those valleys.
Valley.
Yeah, a hump in a valley. It's not even a hill. It's a hump.
A goosebump.
A goosebump, right? You're like, damn, like I made $46 today. $1 million is next. That's how it feels, but ultimately when I got into the financing industry, I, like you, didn't understand anything about it. And because I'm just like, bro, how can you raise $100,000 for somebody who's broke? Like, how can you do that? Like, that didn't even make sense to me. But once I understood it, it was like, oh, excuse my French. It was just like, oh shit, like, oh, okay, this can really happen. And so we did it, and so my thing is that, what has allowed me to be successful over the years is because I understood this concept. And if more entrepreneurs understand this concept, if Jesse can come in his first 45 days and do over 500,000 in business, or roughly about 500,000 in business, if Ray's could come in his first 60 days and do 300,000 in business with no ads, with zero ads, then what can you do if you actually have a network ads? You know what I mean?
And these aren't payment plans.
These aren't payment plans.
People are like, oh, we did 100,000 revenue this month, but 30,000 in cash. It's like,
no,
they're getting all this money in their pocket, 500 grand liquid in the bank, cash. In
and the client, it has monthly payments.
Mm-hmm.
The partner is getting paid in full.
Yeah, you don't have to worry about collecting money. This person's card's not working. This, that, whatever. No, because if they get the money in cards, we help them liquidate it. So the company will get the money in cash no matter what.
It doesn't matter if we have a whole program called credit card liquidations, and we literally, it's similar to Plastique. Okay, I'm just shouting everybody out right now. Shout out to Plastique. Okay. Hey, Plastique's very interesting, you know. Anyway, so it's just like Plastique, but we actually give them the money back when we do the credit card liquidations.
Yeah, so what's the difference between what we do and Plastique?
Listen, I'll tell you this, right? As you said something very key, okay? You said something very key. You said that a lot of entrepreneurs say they can do something and then they don't do it, okay? I've been through that. I'm not going to sit here and say that we've all been through this, right? And so as somebody who's always been in consumer financing, I've been unfortunately in situations where I help somebody get financing. I might connect them with a partner and that partner doesn't actually do what it is that they say they're going to do. Now I'm looking like I have egg on my face. So for us, actually executing what it is that we do is even more important than making the money. Like execution, perfect execution is more important than making the money for us, you know, and we stand on that. Like it's literally perfect. So we have partners like, and I'm going to answer your question, but we have partners like, let's use Corey as an example. You know, Corey, he had certain things that he wanted to add into he was asking questions about, okay, well, how do I do this with my agreements? How do I do this with my agreements? We literally built his new agreement, right? The riders that we put into the application, we built his new agreement for him so that he can have success. He didn't pay us extra for that. We just did it for him. Why? Because if he has more success as an entrepreneur and his paperwork is tight, then what is that going to do? That's going to help that's going to eliminate chargebacks. That's going to eliminate him from not being able to facilitate not to say that he wasn't facilitating, right? He was. But that would just eliminate him from the client's perspective from having the ability to not fulfill what it is that he said he was going to do. And then it also eliminates him from having the fear that the client might try to take the money back from him after he got it. And that's a part of business. You know, as you start making money in business, I mean, anyone who's made a bunch of money in business, they know that lawsuits are part of the game. You know, if you make a bunch of money and you haven't gotten sued, then you haven't made enough money yet, because it will happen, right? And when it happens, if you're not structured properly, that could potentially be the end of you and your business that you thought was a cash cow. And I tell people this all the time, that this is the things these are the things that actually make us more different than anyone else. Yes, we really fund. Okay, that's one aspect of it. But the fact that we care about the legality of what it is that you're doing is a whole nother thing. Right now, for us, we had the ability to work under the beauty of working under a legal firm for over a year and a half. So we've built all of these contract templates that are like, you know, just certified great contracts that eliminate the ability for people to do your clients to do certain things. Right. And we do that because we understand something that many entrepreneurs don't understand yet, is that you have to do 3 things in order to be successful as an entrepreneur, not just one. Earning money is one part of it, but protecting the money you've earned is one part of it, and growing the money you've protected is one part of it. If you don't master this ecosystem of earning money, protecting money, and growing capital, you are not positioning yourself for long-term success as an entrepreneur. And this is the things that people don't understand. And I would say that it's happening at such a fast rate right now because of lifestyle marketing. We're kind of going in a few different directions with this, right? So if you want me to stay on topic, just let me know. Okay. It's happening aggressively right now with lifestyle marketing, because I was just talking to an influencer today. One of my guys, Titus Unlimited, have to give him a shout out. I'm going to say this right now. Titus Unlimited helped me lose 40 pounds in the last year. Okay, he's the GOAT. You could do that. You could put that on. Because success is more than just money, right? It's health, wellness, it's health and wellness, it's money, it's your relationship with God, it's your relationships with your family. You know what I'm saying? Like, and it's your finances. So all of this stuff exists in the wheel of wealth, as we call it. So it's not enough to just have money. You have to have all of these things as well, to have a full, fulfilled life. But with lifestyle marketing specifically, what's happening is that these young kids are making a bunch of money faster than they've ever made it. But now they're taking all the money that they're making and they're dumping it into buying Lambos and Rolls Royces. And and you know, I'm not a hater of lifestyle marketing by any stretch of the imagination. As a matter of fact, we do a lot of work in the exotic car and yacht space, right? We love that space. But, you know, we're not. The thing is that while they're utilizing all this money to purchase this lifestyle, they're not thinking about the other two components that we discussed, which is protecting your money and growing the money that you've protected, right? So let me explain this to you. Let me walk you through this. You earn a bunch of money, okay? You get a lawsuit because, as we've all said, we've all been in experiences where something happened and somebody did not perform the service that they said that they were going to perform, right? So now client's upset and potentially money is already allocated and client wants a refund. So now client, I don't want to move forward. Money, partner or entrepreneur, money's already allocated. Client tries to sue. Okay, you spent all your money on lifestyle marketing, and now somebody sues you. They're trying to take your stuff now that you purchased. Okay, happens to people all the time. They don't think about this. They're taking your stuff from you, right? Why? Because you exchanged money with your client without a proper contract. That's why they're taking your stuff. You exchange money with your client without the client fully agreeing to and understanding the timelines in which your service was going to take place, what type of services you were offering them, how long it was going to take, you know, like what the potential downsides of what you're doing is. Like, you just took the money from them because you were excited, and now this client has an issue, right? It happens all the time. So you need to have the proper contracts in place. We work on that aggressively with our clients. But then the last part of it is the grow mechanism. Like, how are you taking the money that you're earning and you're putting it into vehicles that allow you to grow the money further, right? So that because guess what? When you're young, making a bunch of money, and right, you have the opportunity to look even more lit. I'm going to buy another car. I'm going to get another house. I'm going to do another yacht. Okay, that sounds good. Now let's go 40 years down the line, right? Because hopefully the goal is not to make money in your 20s and 30s and then be out of here in 40s, right? The goal is to make it to old age. So eventually you're going to get to old age, right? So now why aren't you taking a portion of that money that you're earning and allocating it to your future self? Like, why aren't you doing that? Or why aren't you doing that? Because guess what? Things like that, right, are the reasons why individuals like myself, why this platform even exists, because I've been through all of that already. Like, it's not as I was young, making a bunch of money, didn't do the right thing with it, got sued, lost everything, had to be in the trenches for years. It had to do it. So why would you put yourself in position to go through something that someone has already gone through and built the entire exit strategy for you? This is what high ticket offer financing does. We have the front end, which is helping you make money. We have the protection mechanisms, and we have the partnership with Global Group Economics, which is the grow mechanisms that you guys can get involved with certified wealth strategists on the back end. We are the best, and we care the most. It's not just about making money. Like I said, if it was just about making money, guys, we could just go. Eric and I can create a product today, okay? Then we can go rent out a conference room, invite everybody we know, because we know a lot of people, and start selling our products and services with the funding we have, and we'll run up enough money, and then we'll move to another country and chill, right? And just do the work that we have to do for the clients in another country and earn, and that's easy. That's easy. That's not hard to do. Giving you guys access to this, there's a lot of building blocks that have to be walked upon and adhered to in order for you guys to have extreme success, long-term, generational success, right? We want to be in business with you for a long time. I went into a few different things there, Eric, but what's your thoughts on what was said?
Yeah, I love it. I mean, one thing I want to bounce back to is how the funding works. First off, I feel like people were probably like, all right, sounds great, but like, how does this thing work? Right? So you say a broker aggregate. What is that? What does that mean? How do we go about getting people the capital, getting the best terms, and doing what we do? Because that's the bedrock of this entire conversation.
Yeah. So we have so we have personal funding that goes up to $600,000, business funding that goes up to $3 million. All our no doc funding goes up to $150,000. And you explain what no doc is, just for you guys that may have missed that. No doc funding means that you don't have proof of income, okay, or strong proof of income, not strong enough to support the amount of money you're getting, okay. And we do that through a multitude of different products. I mean, we have relationships with all of the banks in the United States, okay. So that's what a broker aggregate is. A broker aggregate is a space where you can come to, and we have access to these multitude of banks. Okay. I was just talking to somebody about this the other day, and they asked us what makes us different than other funding companies out there. I said, well, the majority of funding platforms out there, let's not even discuss the ratio of people they get funded, because there are plenty of influencers right now that are pushing funding and they only close 10% of their leads, and that is a fact. Okay, they're making most of their money by you guys paying monthly fees to be a part of their community. They're not actually funding you. And I'm not saying this to be a hater. They can come and use our platform all day, keep your monthly subscriptions, but they're more than welcome to do that. You know what I mean? I can start putting names out there, but you're more than welcome to do that. Use our funding, could keep your community. But the reason why we're able to do so what makes us different is when you really listen to these individuals, they usually focus on one specific type of funding. Okay, so if they do business funding, they do business. If they do 0% funding, they do 0% business funding. If they do personal funding, personal. And, if they do MCAs, they focus on that. Everybody has their specialty. What makes us different is that we've aggregated all of the best people in these different areas to join our ecosystem. And we have a long line of people in each and every vertical that can support your business. So when you come to this ecosystem for funding, you might be signing one application, but that application is giving you access to all of these different opportunities and products. And based on your credit report, based on, based on your credit report, really, first and foremost, based on your credit report will decide which direction you can go in. And then sometimes, depending on what that credit report says, if you have lower than the qualifications that we need, then you might need to have some bank statements to support what it is that you're doing. But if you have the 680 credit score, then we can have a great time. And we can get you funded. If you have the 680 credit score, we can get you funded. I want to debunk a myth too as well, that people believe that there is not a surplus of people with good credit. Listen, over 50% of the United States has over a 700 credit score. Okay, and we don't even need a 700 credit score to get you funded. But over 50% of the United States has a 700 credit score. All of our partners experience significant increases in their conversion rates on their high ticket offers. And when we're talking about high ticket offers, we're talking about deals that are over 25,000, over 10,000, over 25,000, significant increases because of that one fact that was just stated, over 700 credit score. We do every type of funding that you can possibly think of, from credit card funding, right? Credit card funding, you're like, well, I don't want credit cards. Let's debunk that as well. Credit cards are a loan, period, that came in the form of a credit card. Okay, so we also have a company that we work with that is part of our umbrella that does credit card liquidations. With credit card liquidations, we're able to help you, just like Plastique, to turn your credit into cash. The difference between us and Plastique, as you asked, what's the difference, is that we actually give you your money back. If you look at the reviews, and this is no shade to Plastique, but if you look at the reviews for Plastique, it looks like they have about 50 Better Business Bureau reviews of people that said that they literally gave their credit cards to Plastique and did not get the money back. You know what I'm saying? And did not get the money that Plastique said they were going to give them. And, because of the way their contracts are written, they couldn't even get the money back. And they have no customer service, nobody to call. So these are things that Plastique needs to fix, right? Right? Because I don't mind Plastique being in the marketplace. But my thing is that ultimately, we do credit card liquidations. And so we're able to turn all of those credit cards into cash if that's all you qualify for. But as you said, plenty of people come in, one inquiry, 50,000. Two, just guy last week, 50,000 cash deposited into his account. One of the guys that Jesse sent, 75,000 cash deposited into his bank account. I mean, it's an array of different products. That $500,000 deal, all cash, deposited 3 to 5 days. Like, there's no, so once you sign an application with us, we get to work. The only thing you or your clients have to do at that point is just follow our lead. You don't have to do anything else, right? You don't have to think. You don't have to. You literally, you come into us because you're tired of thinking. You're burnt out on trying to figure out how to get yourself funded, and you just want to get yourself funded. People come to us because they're tired of trying to figure out how they can get funded, and they're ready to just get funded. Okay, you're tired of going around and getting inquiries on and going with coach financing and client financing and flex buy and this buy and that buy. You're tired of it. You're tired. You're probably discouraged. You probably think that no one can fund you. You have this you have this great credit score, but you can't get the money from anyone because nobody's actually doing it. You're tired of that. So that's why you come to high ticket offer financing. We're interested in having all those clients over here. If you're burnt out doing your business because you sell a high ticket offer and nobody's buying because they don't have the cash, and every single funding company that you've ever tried to work with and partner with did not get your clients funded. If you're tired of having that experience, come to highticketofferfinancing.com. We got you. We're here to help. If you're in the business and you're brand new, right? If you're brand new to the business, then why don't you take advice from these other people who have already went through the ringer on all these different companies that we've mentioned, and don't make those mistakes. Just come to High Ticket Offer Financing. We work performance based. We literally don't get paid unless you have success. So what do you want to do? Who do you want to work with? You want to work with somebody who doesn't get paid unless you succeed? Look, as somebody who's been in business for a long time, I'm going to tell you one thing, and I don't know if you agree with this or not, but I'm going to tell you one thing. There's certain products that you can't get unless you pay up front, period, right? However, in a product that's performance-based, I am very adamant about the fact that performance-based work beats all work. Like, I'll give you the world if you show me that you could work. Because I'm willing to put my money where my mouth is 100% of the time. So ultimately, if you have a product or service that we want to try out, we do financing. We can pay for it. But if you say you can do it, then show us, because what we're doing, we can show you. When people test and ask a question like, what are some of the questions that you get from individuals that are interested? Like, because you're dealing with these, you and your team are dealing with these people head on every day. So like, what are some of the questions that you get repeatedly that are like kind of skeptical questions? Let's get into it.
Yeah. Do you want me to answer? Or do you want to answer?
Go ahead. I've been talking long enough, bro.
All right.
Yeah.
So yeah, basically the answer at the end of the day is,
well, let's do what is the question and then provide the answer. Okay. So we could, yeah. So
what are the interest rates in terms going to be of the capital? So the answer is that it depends. We don't know till we actually begin the process, because it just depends what you qualify for. So the money can come from one lender. It could be from multiple lenders. It come in the form of a credit card, or form of a loan, or form of a line of credit. It really just depends. It could be a mix. And all those financial products have different terms that come with them. For example, a credit card, and I think this is a good point to get into the differences of each one. But a credit card is generally going to have in the 20% range of APR. Now, what are the APRs? People hear the word interest and they get all freaked out and scared about it. And the reality is, a credit card, let's say it's 25%, let's say it's 27% APR. Right? That's like the worst someone could ever possibly get with us. It's a 27% interest credit card. That's like the worst. That would mean that you would incur 27% interest per year on the balance you're holding on your card. So if you're holding a $10,000 balance for an entire year, yeah, you're going to pay 27% on that, which would be $2,700 to hold that balance for an entire year without paying it off. So 27% per month would only come down to 2.24% interest per month. So if you're using that credit card into some kind of vehicle that can return you greater than 2.24% per month, then you're already positive, right? And you only get interest on the balance that you're holding. So if you put a certain amount of capital on that card and you pay it off before the billing cycle ends, which is every 30 days, you will incur zero interest. You're just getting access to that capital. So it just depends how they use it, right? Then cash loan, you're getting all the money up front, and that could be APR, it could be amortized. Amortization just means that the interest rates are being spread out over the entire term of that card. So let's say they give you, not card, but that loan. So let's say they give you 5% amortized, 10% amortized over 5 years. That's 2% per year. But if it's APR, then it's 10% per year on that. So very different, right? Then a line of credit is like pulling out a loan on demand where you have access to the capital, but you're only going to pay interest based on the amounts that you pulled out. So the answer is it depends, because all these products are so different. But at the end of the day, what's helpful is this, is you don't have to worry about that, because no matter what, if you want the money in cash, we can get it liquidated, we can get it in cash for you. And whatever you get, these are the very best terms that you're possibly qualified for, and the max capital you're possibly get. So no matter what, you're in good hands. If you want better, okay, let's go ahead and help you fix your file then and put it in a stronger position, which we have options for that. We have credit repair partners for that. We have trade lines, etc., to help build and boost their credit file so they can get better terms later. But one of the other benefits that we tell them about is a long-term benefit. that not only are we brokering you the capital, but we're also brokering you the relationships with these lenders, because the entire lending space is a game essentially of relationships with you and the banks. So your credit file, your credit score, which the banks don't look at just your credit score. By the way, people think like, oh, if I have a credit score, I'm good. It's like, no. That's like a leading indicator. It just makes things easy to look at from a high level, but they're going to look at your entire credit file. The payment history on your accounts, which is the most important. Do you have late payments? Do you have things in collections, etc.? The amount of current utilization that you have, right? So you want to have that generally beneath 50% across all of your accounts if you're looking to get funded. The lower the better. Your credit mix, so the mix of the kinds of credit you have, credit cards, loans, lines of credit, auto loans, mortgage, etc. And it comes down as well to a few other factors, but that's just from a high level. So the banks look at all these different factors on your entire file, which is why we ask people to send their entire file from Experian before we can go ahead and get them their pre-approval process, which we can cover more about what that looks like in a moment. But that's pretty much how that works from a high level. So yeah, end of the day, we help people get the best terms, and if they need help getting to where they need to go, we have options to help them with those things as well.
And what are some of those options?
Yeah, so we have credit repair. So if they have negatives on their file, collections, whatever it is, any derogatory marks in their file, we have to get those completely removed. Now the difference, because people hear credit repair and they think all credit repair companies are created equal. They're not. What a lot of credit repair companies do is instead of getting the negative removed, they're just wipe out your entire account. So the banks actually want to see you having more accounts because that shows that you're more trustworthy. So if you have 3 accounts on your file, that's not showing a lot. It's very thin. It's a very thin file. You want to have a robust, strong file where the more accounts, the better. If you have 8, 10, 15, etc., and they're all in good standing, that shows that you're responsible with many kinds of credit or funding or loan options, whatever you want to name it, and that you're a reliable borrower. You're trustworthy, going back to that same word, right? So the banks see that, okay, cool, I want to give you more capital, and I'll give you better terms and more capital because of that. So what we do is we don't wipe out your entire account, because now we're just going backwards. Yeah, we have the negative removed, but now your file's thin. You're still not going to be qualified for funding, or you're not going to be as qualified as you could be. So we make sure that we get the credit repair done in a way that allows them now to get into funding, because the reality is we don't really make any money on the credit repair. We make our money from funding people. So the credit repair is just in place to get them to a position to be able to get funded and get the best terms, max capital possible, because that's where everyone's going to win. So the next option we have is if they have to build a more robust file, right? They need more accounts. They need stronger accounts with higher limits, because if your highest limit is a $2,000 credit card, how are the banks going to go out and give you $25,000, right? You've only proved yourself worthy or trustworthy with $2,000. But if you have a file that has 50,000, 100,000 on there, and you have good standing with it and a long history with that, then the bank's like, oh, you've been successful with this amount of capital before, you have a track record, I can trust you. Okay, let's go ahead and let's give you more capital now. So with us, we have primary trade lines. Again, all trade lines are not created equal. A lot of people know of authorized users, which are basically when you go to like your grandma or a family member. She has, let's say your grandma has a credit card of 20 years with a $30,000 limit. She calls the bank. She says, hey, add this person as an authorized user to my account, and you basically adopt their credit history. Years ago, that worked, but nowadays, because of the banking system and the algorithms they have, the AIs, etc., they know the game. They're not dumb. They caught on to that. So it doesn't really do much these days. Does it hurt to have it? No. If you can have it, might as well throw it on. Doesn't hurt, but it's not going to really do much because you're a secondary holder of that account. Now with us, we have primary trade lines to where you are the primary holder of that account. Your name is under that account. So the banks will be like, oh, this is actually your file. Okay, you've been successful with this. Okay, cool. Let's go ahead and now give you the capital.
Yeah, I absolutely love that. And all of these additional products that have been added to our product line are there, as you said, to help individuals get funded at the level that they want to be funded. Let me be clear though. you don't like, let me be clear. You guys need to understand that with our zero to no doc funding option, you actually do not need to have a significant amount of credit lines open in order to qualify for that program. However, some of you guys are coming in with light files, right? Like super light files.
Like Erick.
Yeah, like, and if you have a super light file, then yes, you're gonna have to go through this option. And that light file might not even be just because you don't have enough different types of lines. It also might be because your lines are you have too many recent new lines of credit, right? That also can make your file light as well, as if you don't have any credit history. Right. So these trade lines, like some people have great scores, but they're young and they don't have much history. These trade lines, they come with history as well. Okay, which is part of what makes it a robust trade line to add to your file, because you're getting that trade line and you're also getting that history that is attached to that trade line. So that was a great explanation. Is there anything else that you want to cover?
Yeah, I mean, a trade line, just so people kind of understand, is basically like an account on your file, just another account on your file. And the ones that we have can be mortgage, loan, or term loan, etc. So it also can go back up to 19 years. So I'm 27. We can't go back to the time I'm like, before 18. Yeah, exactly. Right.
20-year Lambo trade line.
Good math. But we can go back to 18. But if someone's older, we can go back that full history. So we're put at about 95% paid off, and our partner that does that, they have ways for it to report to all major bureaus. There's no issues. Everything is good and kosher with that. And we can do 100K or even 200K on the personal side, and then on the business side, because business credit is important too, 50K all the way up to $1 million. And basically what that means is if you have 100K trade line in your account showing 95% history of it paid off, well, if you go to the bank asking for $100,000, you're going to be a lot more likely to get that, because you've already shown yourself, again, back to the same concept before of trust. You showed yourself trustworthy with that kind of file.
Right. I mean, guys, is the most important thing for you guys to understand is that credit and getting funded, as exciting money is. Money is very exciting. We all need it to live. We all need it to buy the things that we want, right? But like the reality is that the credit game is not really this, like, it's not this pie in the sky, untouchable, can't get done type of game. Like, it is something, the banks make money literally by lending you money, right? So they want to give you this. They have to give you this money. Like, they want to and they have to. Okay, it doesn't matter what color your skin is. It doesn't matter what your religion is. It doesn't matter if you're, what type of relationship you're in. Like, the reality is that the banks want to give you the money. They want to give people who have all of the things that Erick discussed. They want to give those people the money. So the key is to just have the things that they want so that you can get the money. And here's the thing, like I said, if you are a partner interested in our program, or a closer that you might be closing with another company, right? You might be closing with another company, and you might say, which is what I want to get into next, Erick. You might be closing with another company, and you might be closing high ticket offers, and you want a solid financing option to help you have a higher conversion rate with those deals. High ticket offer financing is here to help, right? We're literally here to help. A lot of partners, closers utilize our product in that exact way. And that brings me over to your stage, Erick. For partners now, like for closers, for partners, what do you think makes us special for them? What do you think makes this product important for them to add if they're selling a product or service that's 10,000 or more, or not? Like, what is your as somebody who comes from that space, what's your thoughts in regards to that?
Yeah, Real quick, I think there's one topic we should touch on before we get into that is just what are some of the general minimum requirements to get funding? 'Cause I know people are going to ask that, like, all right, cool, sounds amazing. I want to do it. What are the requirements? Kind of touched on some of them, but what are some of those requirements?
So the requirements are very simple. I mean, listen, I don't want you guys to try to be credit experts. That's not, we're the experts here. You don't have to be a credit expert. If you have a 680 credit score or higher, send in your credit profile. We'll let you know if you can get funded right then and there and how much, or if you need to go into any of the options that Eric just sent. But that Eric just said. But we also can fund people with 650 credit scores or higher if they have a military affiliation. So that is brother, uncle, cousin, wife, niece, nephew, whatever the case may be. You can get funded at 650, and we can get you funded at 640. If you have business bank statements as well. So the business funding can go a little lower, and that's for different type of loan products. That's the threshold. So we want to get you over that 640 mark so we can actually get you funded. I know there's a lot of companies out there that say they can get you funded at 600. Okay. I'm just,
It's all serious.
Listen, anyone can say anything at any time, and that's fine. No one's allowed to not say that they can get you funded at 620, okay, or 600. The last company that we tried to bring into our aggregate, they literally on their terms and conditions, it said that they can fund you at 600. And when we got on the platform, they're like, hey, we can fund you at 600, but it's extremely hard. It really is better at 640. I'm like, okay. Yeah, right. I'm like, all right, cool, thanks. We already have that. You know what I mean? So we actually don't need what you're offering because we already have that option, but I appreciate you. That's the name of the game. The name of the game is 680 or higher, 650 if you have an affiliate. If you have a military affiliation, 640 if you have strong bank statements. That's the name of the game. And if you don't have it, then you can come to us to help you get there. It's real simple. We don't really have to do too much thinking. No matter what stage you're in, good credit, bad credit, as you said, we don't specialize in. We're not like credit restoration. We're not a credit restoration company, but we do have some strong partners that have built their business around building your file so that you can get funded. You made a great point that I wanted to just double down on. The importance of not blowing up your file is what we call it. Blowing up your file is when you just obliterate and remove everything from your file. That's what blowing up your file is. Yes, your score is going to jump, but the history's not there, and that's pretty pointless for your goal, right? So then you're going to have to blow up your file, then add trade lines. Okay, that could get expensive. You want to just be able to spot remove stuff from your credit so that you can go ahead and get funded immediately within 30 to 40 days. And that's, I'm not saying everybody's going to go through that and get their credit fixed and funded within 30 to 40 days. But I will say the vast majority of you guys will go through this process and get your credit fixed and get funded in 30 to 40 days.
And that's the full process too.
The full process.
Removed within about 2 to 4 weeks, then go into getting the funding.
Yes.
Which will take generally 15, 25 days at the worst case.
At the worst case scenario. And most of the time we can rush it so you can start seeing results as quickly as your first client did within 5 days. And if you get funded with us, no matter what, you're going to start seeing results within 5 days, right? You just might not have your full amount yet, but you already have approvals pending or denials or whatever is going to happen. We have a very strong closing ratio. I want to talk about that as somebody who's actually dealing with the files themselves. I say what I say, right? But I want to hear it from you. Let's talk about some of the closing ratios as well. Did I answer your question as far as what to need? All right, cool.
Yeah. And I'd say one more thing on that is if you're like a 670, 660, send in the file anyway.
Right.
I mean, we want to prefer 680 or above. But reality is, 70% of the U.S. Has a 660 or above. So if you're in like that kind of middle range, worst case scenario, what happens is, so people understand the process too, they're sending their file, our brokers will manually review the file, and they're essentially trained analysts, and they'll let us know what the situation is. So if you're not ready to get funded, we basically tell you what needs to happen, which we could charge for easily, which companies do charge.
Hey, listen, we might have to.
Exactly.
Hey, you know what? Sorry guys. Sorry guys, we're gonna have to charge for that going forward. Yeah, that was perfect. But right now we're not charging for that. So go ahead.
So yeah, we basically let them know like, hey, here's what needs to happen, or here's the situation with your file. So I call it red light, yellow light, green light. Red light is, hey, the file sucks, can't help, and that's if you're like in the 500s generally. Yellow light, green light is, okay, congratulations, you're pre-approved for 75 to 100K. And if we tell you you're pre-approved for these amounts, these are the low end, what we know we can definitely get you. But top one is this, that we do not speak on maybes, we speak on certainties. So if we say 100, doesn't mean we can't get you 125 or 150 or beyond. But we're going to tell you what we know we can get you. Now, a yellow light is maybe you have like a derogatory on your file to get that removed. Okay, let's go into it. Or, hey, your utilization's a little bit high. Pay down $900 in your Capital One card. Real situation, by the way. And then all your accounts will be below 50%. Cool, we're now ready to roll you into funding. So that's just like when there's little small things that need to happen. Or it's like, hey, you're pre-approved now for 20 to 40K, but if we can go in, then our brokers would do this for you. We'll go in, help you raise your credit limits, then you're going to be approved for about 100K. So either way, we make sure people are in the best position, and we'll let them know what needs to happen. And there's no inquiries, there's no hard pulls. It's our team literally looking at your file, telling you what needs to happen, or hey, you're pre-approved for this. We know we can get this for you before we even begin the funding process. Yeah,
you know what? I'm glad you just said that, because I literally just remembered that Corey's client, the last person that he sent, the last person that Corey sent, did I tell you this? Did I tell you already?
The pre-approval?
Yeah, the one that he just sent.
No, but I need that.
Oh yeah, cool. Yeah,
He's ready.
You're right. So the last one is exactly what you just said. So the last one that Corey just sent, they said that if we put him through now, we're hitting around 50 more or less, 50K. But if we wait until July, when the next reporting cycle hits, then we're looking at 100 plus. Okay, so the question for him is, do we want to, is he good with the 50, or does he want to wait 30 days and get the 100? No matter what, we still want them to fill out the app, but we'll just process it at that time. And that is for Corey's last client, which is Henry. Okay. But yeah, similar thing. They have 6 new accounts, right? 2 too many. Okay. And because of that, they got that type of exact situation. Right now we're here, but if we do XYZ, we're here. Right. So yeah, this kind of stuff is happening every day in the boardroom. We're literally funding people every day, literally getting approvals every day, literally signing applications every day, literally getting people 50 to 100,000 every day. At this point, 30,000 is like low. You know what I mean? Like when somebody gets 30,000, we're like, all right, okay, cool, we'll take it, but like we really wanted to do 100. Yeah. We really wanted to do at least 50. But here's my thing. I mean, you want to work with a group who's thinking on that level. Like for us, doing 50,000 is a decent time. Like, and that's kind of our bare minimum. Where like if you're coming in at 50, 48, 50, we're like, all right, cool. You know what I mean? This client got funded. 30,000, they're usually coming in for multiple rounds. So far, that's what we've experienced. They get funded 30,000, they go about their business, they come back, they get a little more, but we're pushing that needle. They're all becoming affiliates, which I love, and I think that's special. I mean, imagine going through a process, and after you're done with their process, you love the process so much that you come and ask them, can you help bring some more people and make some money?
I'll talk about Garrett for a minute.
Yeah, let's do it.
So I had a buddy named Garrett.
What's up, my friends? Just want to take a second and shout out my man Erick with High Ticket Offer Financing. Honestly, was able to get me like 30K funding, and I totally didn't expect it. We had gone through it with several different people and applied and got rejected a couple different times. I've been working on the credit repair stuff, but they were able to get like 30K within a couple days. So definitely shout out to Eric and the team. They did great by me. I know they'll help everybody else as well.
He just went through credit repair with one of those other companies that wiped out all his files.
Yep.
So his score was in the low 700s, which again looks good on paper, but looking to the accounts, he has like 3 accounts, right? So his file was thin, and it's what we call a 50-50, which I think we need to change that term because it's not indicative of what actually happens. It makes it sound like it's hit or miss.
Guys, let's just hit on this real quick, okay? Our brokers will say 50-50, and they say that for liability purposes, okay? Like, let's just be clear. They're only saying it for liability purposes because they want to set everybody's expectation that this file may or may not be of interest to the banks. However, from our experience, 50-50 files are just like the rest of the files. As a matter of fact, we have more clients that fund because there's no expectation on a 50-50 file, right? But the reality is we've had more 50-50 files fund at 100,000 than, like, you know, it's normal for a client who got approved for 50-50 to walk away with $100,000+. So 50-50, you're right, it's not indicative of what it really is. So we're putting this explanation out there on wax with us saying it just so that you understand what 50-50 means. 50-50 file does not mean that you will not get approved or you might not get approved. 50-50 file means that you probably will get approved, but there's a 20 to 10% chance. I'm not even going to say 20. I'll say 10% chance that you might not.
I mean, is it even that? I've never seen a 50-50 not get funded.
Yeah, me neither. Actually, well, in my 10 years, I've seen one.
Okay. Maybe we need to call it a 99.9.
It's a 99.95%
like
chance.
hand sanitizer.
Yeah, exactly. The germs go away at 99.5%. No germs. But yeah, you're absolutely right. You know, so let's continue on with what you were saying about Garrett.
Yeah. So basically, Garrett came in with the credit repair, yada yada. So he needed $30K for his solar business. He went to all these other banks, other lenders before, tried it for months on his own. Couldn't get funded. Came over to us. He's like, look, man, I need the capital. Like, all right, cool. Here's the situation. You're a 50-50 file. And I was like, you know, what do you want to do? Because we're very transparent and very open with our clients, because for us, it's not like we're not making a sale. It's about setting proper expectation going into it so that they're happy on the back end, and that, you know, there's also a proper expectation with the brokers as well in terms of how things work. There's no convincing. We're not the guys that over-promise. Like, if we tell you something, we're going to under-promise. We're the under-promise, over-deliver guys. So basically, anyway, he comes in. It's like, yeah, I need $30K for my solar business. All right, cool. You're 50-50. What do you want to do? He's like, look, I need the capital. Tried for months, couldn't get it. I need the money. Let's do it. Okay, great. Ended up getting him $50K. Then, and the guy before him that was a 50-50 got $144K. So, anyways, Garrett comes back maybe 3-4 months later, going through a round of funding right now, wants to add a trade line and get even bigger capital, added a trade line on, doing that now, went through credit repair too, getting all the old inquiries removed. He also had a negative pop up, getting that removed as well. So he's going through the whole...
Man, that man has gone through the whole business.
The whole thing, man. And now he's a lead generation guy.
Right.
So now he's one of our partners who's now sending us deals, gonna run ads, has a cold call center getting set up, doing outbound, the whole nine, sending deal flow over to us.
Listen, can we give Garrett a round of applause? Yeah, come on, man. Hey, that man is an expert at highticketofferfinancing.com. Literally, he done hit every single stair that we have.
Yep.
Okay. So next he needs to do the Global Group Economic Initiative. That's the next thing he needs to do.
Yeah.
Then he would have touched everything. Man, shout out to Garrett. Shout out to Garrett. Though, listen, that's beautiful, because you had somebody who got funded, okay, got the inquiries removed so they can get funded again, became an affiliate, right? It became a partner, okay, like got a trade line. It's just, that's amazing, man.
Yeah.
That's amazing. And his energy is still high.
Oh, yeah.
It's actually higher now than it was before.
Yeah.
Guys, when was the last time that you guys have been involved? When was the last time you guys have been involved in a product, right? Where the energy of the person who received the product, okay, was actually higher at the end than it was in the beginning.
Oh yeah. When the product becomes the marketing for you, you know you have something.
You know you have something. We're big on that. We're big on having something. Listen, we are very big on having something. You know, for us, this is a very long-term thing. I mean, we look at this as long as the banks are operating, we're operating. Even going into different industries as well, because we want to be on the forefront of everything that's happening in the world. You know, so crypto, right? We know that that's coming. You don't think high ticket offer financing is going to be doing crypto lending? Of course we will, right? BRICS, okay, that's coming. You don't think high ticket offer financing is going to be doing funding for the BRICS nations? Of course we will, right? I mean, we want to bring this thing globally. At the beginning of this, we spoke about first of all, is there anything else you want to add at this current time?
I'll give one more quick example.
Let's do it.
So when people ask, like, oh, when you say max funding, what does that actually mean? I was like, this is one example of many. What's top of mind for me right now? There's a lady that came in. She makes $3.5K a month income.
I remember her.
Yeah, that's near poverty. It's not a lot of money.
Sorry, guys.
That's what, 36,000 per year income. Then you have taxes.
Right.
And all that.
In an inflationary economy, like we're literally inflating at scale.
In the United States.
Where
everything's getting more expensive, like you said, with inflation.
Yeah.
So she had a 726 credit score. Sent her file in. She got pre-approved for $75K, no docs.
Okay, that's 3 years of her income.
$75,000. That's the thing with this space. It's like you say 70K, 75K, and it's like nothing, right? Like we literally make money almost pop out of thin air through the banks.
Shout out to Chase, Bank of America, and all the above.
Yep, exactly. Yeah. So that's just one quick example of, you know, the kind of capital that we get people. Again, Garrett, 50-50 file, got 50K. Got before him 144K. We got Kim and them, no docs, 151.5K. We got Robert. How much now? Like 100 plus?
He's over 100. Robert's over 104 with a few more lines pending. I mean, listen, that's every day for us now. Like every day we're cranking them out at 100 plus. And I want to say this too, guys. Like, things are happening in the economy, guys. Like, I wanted to segue into this. Do we have anything we want to add about the high ticket offer financing piece?
I mean, there's a question you asked me.
Yes.
I kind of bounce it back to like the basics. I don't know if you want me to.
Yeah, go into that.
Can you just like high level the question again for me?
What do you believe? Like, I just want to talk to you about the vision as somebody who's come in from the outside. Okay? Like, what can a closer expect if they choose to utilize to become a partner with us so that they can use our funding to help them become more successful with their current clients that they're already working with?
Yeah. So first off, we want everybody to eat. We're not greedy here by any means. We're in the financial service space. We make money literally pop out of thin air from the banks, essentially.
Literally.
Yeah. Mm-hmm. So there's plenty to go around. It's very lucrative for people to get involved in. So as a closer, you bring major value not only for yourself, but to the organization you work with. And we will make sure you get a piece of all the deal flow that's happening. So let's say instead of you just closing a deal, you have 10 other guys on your sales team. You're in an 8-figure business closing deals, for example. They end up financing, let's say that $400,000 a month, and you're getting a piece of $400,000 a month. You could be making as much money as you're closing, double your income essentially.
Yep.
And have it passive recurring coming in for the lifetime of that client, whether you're working with them or not. Then if you're a smart closer, you're always networking because that's just the nature of the space. You should always be networking, talking to businesses because as a closer, it's just a volatile space in general, right? We're dealing with small businesses. They come and go. This person's promising you'll make 10, 20K a month commissions. You get in, you find out they're lying about it. This happens, that happens. Marketing fluctuates and ebbs and flows, just the way the game goes. So you always should be in contact with multiple businesses. Well, now if you have this in your arsenal, you have extra value to bring them where they will literally can double, triple their revenue like this, because all those deals that they're losing before from people not having capital is no longer an issue. And not only that, they can create now higher package offers. Your highest package offer was a 10K offer. I have multiple partners that I work with, and we're designing 50, 100K, 150K plus packages because we know we can fund people, and the financing on some of them becomes part of the pitch even. Because at the end of the day, you don't go to Harvard paying cash. You don't buy a car in cash. You don't buy a house in cash. So why would you invest into your business in cash as well? You can leverage the bank's money. Now, look, everyone has their own preferences in terms of what they want to do, religious beliefs, etc. as well. But the reality is, if you offer someone two options, you say, hey, this package is XYZ and includes financing, this package is this. Most people, even if it's more expensive to do the financing route, they will still choose that, and that's based on experience. I'm in the trenches. I'm running multiple sales teams with different offers in different spaces. So I see it firsthand. People will still pick paying even more money because they don't have to leverage their own hard-earned cash. They can leave it in the bank. They can leave it in their investment properties or whatever else it is, gaining interest, growing the capital, and having it liquid, and then leverage the bank's money or other people's money to get what they need, a product, service, mentorship, investment opportunity, whatever, and then grow their money that way, get the return on investment, know your break-even point in your ROI, whether it's month over month or yearly, however that works. Know their point, pay it off, and then boom, they're good. And then another service we offer, which I'll let you touch on, is debt service, which basically mitigates and covers their downside risk, because that's a huge point for people, especially if they're like a little bit nervous, like, but what minimum of payments, or dealing with multiple lenders, or this and that. I'm worried. I don't want to, default or mess up my credit. We got you. Debt service. I'll let you cover that.
First of all, it makes me happier than you can possibly imagine to know that others are utilizing the financing option as a like it's in their pitch, because that's been part of my reality for quite some time. I mean, once people, even that music company, the music company that I was just telling you about, I mean, these guys have been utilizing us for a long time. And once they started utilizing the service, I mean, they just removed talking about cash because they weren't having success with that, and just slowly just started only giving people, you can, exactly what you said, you can pay this in cash or you can pay this in credit, and we can get it to you in 30 days. And everybody's like, yes, I want that one. And that's beautiful to see, because that is what this is all about. I mean, how many people want to pay for Harvard out of pocket, all cash up front? I mean, unless you're flipping Harvard degrees for money, you probably don't want to do that.
And what else can you do with that money too? What's the opportunity cost of not having access to that?
Not having access to the cash. All right, but what that says is that we actually have to be funding aggressively in order for a business owner who literally lives off of their money to feel comfortable to say, you know what, I'm going to build my ecosystem on this thing. We're almost like Ethereum almost for businesses. You know what I mean? Mm-hmm. Literally, like, we're like, businesses are building on top of us, and we have a responsibility to make sure that all of you guys are successful. Debt service, and we are serious about that. Like, if we have partners that are coming into our program that are sending us leads and not having success, like, we will literally equip you with better contracts. We'll even say, listen, just send your funding leads over here. We have a whole team that's fully trained to understand how to talk to your leads. Send your leads over here. Like what. We literally are very concerned about businesses being successful, because I tell people all the time, again, funding is funding. It's money. It's the banks. Okay, we get it. What makes us different is the fact that we literally We literally care about the success of the longevity of our relationship together. That's what makes us different. We want you to use us for 20 years. Shit, we even want your kids to use us. You know what I mean? Like, at some point, your kids are going to be out in the marketplace, right? And they're going to need some capital. So why wouldn't your kids use highticketofferfinancing.com?
Yep.
Right? Chase Bank, your kids are going to Chase. But what's out there for entrepreneurs out at scale that works outside of highticketofferfinancing.com? I don't know it. And I look at myself as just, I mean, I did not create High Ticket Offer Finance. I did not create this product. I did not. I just saw that, you know, I was working for a real estate company and I repurposed their product for this. And then I saw how successful it was. And I brought in others that can help to expand the product line, so that when I was originally selling high ticket offers or my own high ticket offers solely, I wanted to make sure we had a robust amount of options for myself. I always needed more capital, so I'm trying new things. And some of these people ended up being great. So they ended up in the ecosystem. Now, it's exciting to watch other people have success utilizing the very thing that we've been using for over 10 years now. But I just like to see business owners become successful. So that segues into debt service. I mean, debt service is something that I learned in real estate. Okay, debt service basically means that you take a portion of the loan to pay for the loan. Okay, so people see all of these skyscrapers going up into the sky, and these buildings cost hundreds of millions of dollars to build, sometimes billions to build. Number one, nobody's financing a skyscraper all cash. Okay, I don't want to say nobody, but it's very rare. Okay, that somebody would do that. Why? The banks are going to give you the money, and when the banks give them the money, they're not paying for the monthly payments out of their pocket. Nobody's doing that. Let me walk you through the process of how a building, okay, utilizes debt service. Very simple. Bank gives them $100 million. We'll use $100 million for easy purposes. Okay. Bank gives them $100 million. Loan payments are 1% a month. That puts them at $1 million a month. Okay. Nobody's paying $1 million a month out of their pocket. So what do? They say, all right, cool. Let's say $1 million a year. That's more realistic. Okay, it's $1 million a year for the loan. Nobody's paying $250,000 a month for anything. So what they'll say is, all right, cool. What I'll do is I'll take, how many years do I want to have this loan payment deferred? Okay, deferred just means pushed out into the future. How long do I want? Okay, it's going to take me roughly about 3 years to build the building. So let me do 4 years. So what they do is they take that 100 million, they deduct 4 years of payments, which puts them at 96 million. The 4 million they put into an account called a debt service account. That's just another name for an account that's just, you just auto bill payments from. Okay, that's called the debt service account. You connect that account to all of your loans and set all of them to auto pay, and then boom, like clockwork, the bank is getting their money. But you didn't touch the money. You didn't touch it. You didn't work for any of this. You just got the money from the bank. You did some mathematics, okay? You deducted that, put it into another account called a debt service account, and you set auto bill. So the two things that you did was mathematics, the three things you did was apply to for a loan, do some mathematics, and do auto bills, okay? And then that's it. That's debt service. Okay. And then what they'll do is they'll auto bill this payment. But if you ever see buildings, right, that are selling units and properties and rentals before the building is complete, why do you think they're doing that? They're doing it not because they think it's cooler to help people get in cheaper while the building's being built. No, they're doing that because they're giving you incentives to come in while the building's not built so that you can help them pay off their loans. Like, that's what they're doing. So you're coming in early, you're buying units from the building or renting the units while the building is still being built on top of you. You're helping them pay off their debt. You're helping them service the debt. And literally, the fourth thing that they did was market to people who wanted to buy the property. And they never used any money out of their pocket at any point. They didn't use money out of their pocket to buy the building. They didn't use money out of their pocket to service the loan. They didn't use money out of their pocket to market to the people who are coming to the building. They literally used the money from the bank to market to the clientele, the money from the bank to pay for the building, the money for the banks to pay off the loan, and the bank is just making their own money back. So all you're doing is brokering a deal intelligently.
Yep.
That's debt service. So you can apply this same principle to any business model that you're doing where you're selling a product or service, where you're selling a product or service that's over the amount that you want to cut. I don't suggest anybody pays for loans out of pocket when you can do debt service. It doesn't make any sense. Why would you tie up any of your personal capital when you can do debt service? The only reason why you would have to use money out of your pocket to pay bills is if you're utilizing bank loans improperly. So let's talk about that real quick. Utilizing bank loans improperly just means that you're utilizing bank loans to buy depreciating assets. Cars, belts, vacations, dinners. There'll be people out here that'll say, oh, well, you only live once. You should just go be a consumer and do all of that. All right, great. I'm not saying that you shouldn't be a consumer. I'm saying that you should be a banker first and be a consumer second. So what does that mean? All that means is that you take the credit that you're getting from the banks and you put it into vehicles that make you money that will pay for you being a consumer. That's it. Right? That is the way that you're supposed to be using credit. If you use credit in that way, you will be massively successful. The entire United States is built off of debt and credit. Okay, I believe wholeheartedly that what makes America the strongest country in the world right now. Okay, well, that's quickly declining thanks to our elected officials. Thank you. My thing is what makes America as great as it is, right, I believe it's because of the debt. People think it's because of the military. The military needs money. That all comes from the debt. America just so happens to also hold the most debt in the world, right? So let's do the math. Everything that America does costs money, from guns to armies to businesses to getting people in and out the country to all of these new innovative technologies and all these different things. It all costs money. America also happens to be the highest holder of debt in the world. When you do the math, it makes sense. America has all the money because they're borrowing it from everybody and they're using it to prop up their economy. Right? So you could do this with your own personal economy. You can use bank money in your own personal economy to float every single thing about your lifestyle. The problem is that you're taking the money that you're getting from the bank and you're using it directly on your bills, directly on your vacations, directly on your lifestyle marketing, right? Even lifestyle marketing has an ROI attached to it, right? So my thing is, like, at the end of the day, you want to use the bank's money to buy cash flowing assets or to buy things that are going to make you more money. And as long as you're doing that, you're playing the credit game properly, right? And you're going from being a consumer to being a banker. You're going from being somebody who's scared of holding monthly notes to thinking not about how much you have to pay, but how much you can make. And that's what you were saying from the very beginning about the APR. A 27% APR is 2.24% a month. So if you can take that bank money and earn 5% a month, your bank money is literally paying for its own interest, right? So that's how you run the game. And then the extra buffer that you have on top is what you're using to live your lifestyle. You know what I'm saying? And you can rinse and repeat that over and over and over. And once you get into the habit of doing this well, you can rinse and repeat this same process over and over and over and over and over again. So here's the structure on how you become successful. Very simple. Find a business first that has a high ticket offer. Okay, something that you can make a grip of money with one hit. Okay, one lick. Then get your credit to a point where you can get funded. Go get funding from high ticket offer financing so you can get the maximum amount of funding possible. Okay, so let me address that. The reason why you can't just go to a bank and get what we get is because that one bank will give you one inquiry, which will give you one problem. Okay, like they'll cap you there, and then the other banks will say, "Oh, look, you got a loan from Chase for 10,000. Sorry, you're overutilized. Come back to us in 3 months." When we do it, because of the relationships we have with multiple banks, we're able to take that same 10,000 and maybe get you 100. Okay. So that's the difference. So you can go get 10,000, and you can come to us and get 100. It's up to you. So my thing is this: you come get your 100,000 from high ticket, or I'm not going to say you're going to get 100. You come get your money, your max funding from high ticket over finance. Some of you guys might get more. Some of you guys might get a little less, but you come get your max funding from high ticket over financing. Then you take that money and you dump it into a business that you know is going to make you some money. Right. And you do the debt service first, and then you dump it into a business that's going to make you money. You use the business, right, to pay off the loan, and you take the excess capital and you use that to live. And as the bank is getting paid back, they're going to do what? Right. Because you said what? They're paying for the relationships. The bank is going to come back to you directly, not us. They're going to come back to you directly, and they're going to say, "Hey, Billy, Christina, whatever the case may be, congratulations, you've been successful at paying back your loan, so we want to offer you more money." So now, like clockwork, you didn't do the business, you didn't build the business, you didn't work for the money. You just built up your credit profile, got the money from highticketofferfinancing.com, put it into a business that works, took that money to pay off the loans, used the extra money to pay for your lifestyle. Now they just offered you more money, and you do it again. Next thing you know, 10 years, you do that once a year. 10 years later, you have 10 sources of income that are giving you X amount of dollars per month. And you did this all because you used your brain to leverage the banks against, you know, the lifestyle that you want to have. And then you can stack that up in perpetuity. It's not really that hard if you think from a delayed gratification mindset versus an instant gratification mindset. It's not really that hard to process. The problem is that you'll want to be in a Lambo today. That's the problem. You know what I mean? That's the only problem, because the Lambo's not going to be here in a year. Okay. The girlfriend or boyfriend or the trip you want to go on or the bag you want to buy, it won't be here in a year. So you have to get that now, right? But if you remove that mindset and you can just think like, hey, you know what? If I wait 12 months to get that place I want, if I make 12 months to get that car I want, if I make 12 months to get that boyfriend or girlfriend or whatever the case may be, and I take this 12 months to really focus on building myself up, you could be in a position literally where you never have to work again. And you don't think that people need to hear this right now with what's happening in the economy? You know what I'm saying? Like with what's happening in the economy right now, people are losing their shirts, man. I was talking to a wealth advisor yesterday, and she said that one of her clients, or not one of her clients, but one of her clients' clients said that they didn't even have $100. I'm like, I'm so far removed from that reality that I can't even understand what that means. But she was like, listen, you have no idea. Like, people are out here hurting, starving, struggling, $100. They can't get it. Like, you can't get $100. And when you think about it, you know, it's a lot of, when you really think about it, you can see that it's very possible that that people can't get $100. You know what I mean? It doesn't sound that far-fetched when you really pay attention to what's going on. So it's kind of like, but if you can't get $100, but at least 50% of y'all that can't make 100, that can't get access to $100 right now, can actually with your own hard two-hand labor, at least 50% of y'all could come to high ticket offer financing and get over 50,000 today. How does that work? And why wouldn't you do it? And for those of you that don't have the credit, then just become a partner with us. Just become an affiliate with us. Make money referring people to our program. so you can then get the money you need to fix your credit and use the bank's money to leverage it and do debt service. So we have a lot of different options. We are here to help. We want to see people succeed. And right now, with what's happening in the economy, there is no better time. And really, I would say a lot of us in the financial space are saying that this is the last time that we will be able to do what it is we're doing right now before things in the economy shift. Is there anything else we want to discuss on that point?
No, I'm good, actually.
It's time to go.
Yeah.
Let me say this last thing, okay? And this last thing will only take 2 hours to finish. Nah, this was a great one, guys. Erick has to go to a flight. Thank you for joining us today, my brother. Can we give Erick a round of applause?
Yeah.
Okay, and yeah, so we'll see you again very soon. High Ticket Offer Financing. This is King. This is Erick, and we're signing off. Thank you.